The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And this week, everybody's just kind of sitting on the edge of their seat waiting for the unemployment report. Tuesday night here in the Philippines. Hope you guys are doing well in the States on a Tuesday morning. And as you've probably been reading the news this morning, Apple is taking a little haircut, little tax issue possible with the Irish government over there, and the EU mainly, I guess. Let's take a look at Apple really quick. I was looking at silver earlier. Somebody in the den had kind of mentioned, I've been talking about, we always try to talk about what's the easier trade, what's, letting the market come to you type situation. Silver really has defended quite well this 1856 area down here. I want to pull this up. This is also in the scanner. There's the 1856 area. There's the weekly unfurloughed. I love these. If you look at how silver's acted and you look at these inflection points, kind of look at the color-coded situations. I mean, I can't complain about them, but let me see if I can get my chart to change here. Huh? Come on. God, don't be one of those mornings or nights. Here we go. Let's take a look at gold at the same time and just kind of reference gold here. It talked about, what's the opportunity. It wasn't really anything to lean on gold. It was kind of a pass for a while. 1347.48 was a big number. The other one down south is 1295, 1296. So, silver's acting quite well on those weekly unfurloughed there. It's pulled back, obviously. It's giving you a chance to really, let the market come to you around those weekly unfurloughed. Can gold drag this silver trade down? Yes, it can, but the silver trade, I like how you can play defense against that weekly unfurloughed. As you know, going back to what we originally said at the opening of the show, the unemployment report coming out Friday. And they're talking about full employment now. I don't know how in the world they could say that. Use the term full employment based on the Cook numbers of the unemployment report. But, everybody's talking that way, and then you got to figure, what the kind of mindset's going to be with all the data. Cooked or not, that's what the Fed looks at. So, what would happen to gold and silver then? Gold may pull back a little bit. I think silver's a little bit different animal right now. So I like how it's acting. Here's the 10-year talking about that unemployment report. I really think this, I haven't been a fan of shorting treasuries forever. You guys watch this show, you know that. Just kind of been blindly, almost in an insane way, just, looking at what's going on in the global rates and how this 10 years been just hanging in there. Every time the market rallies, worst case, it goes sideways, seems like it. But I think this might be the first opportunity. We kind of got a gift here. We kind of rallied back up into these unfair lows on the daily here around 132, that general neighborhood, kind of like, close below, go back and retest. We always talk about that being a nice little trade. But again, it's amazingly holding up, stepping back from it and saying, oh, well, wow, is this the sell-off? And, we've kind of got a gift here rallying back up into that area of resistance, former support, now resistance. But, you're still fighting a couple of global arbitrage situations when it comes to the 10-year. If they, if the numbers are about what they think they are, Yellen and her crew may have to dial up the rhetoric even more. Not saying they're going to do anything, but it's still a concerning trade to try to short the treasuries to me, but you do have some things to play defense against right now, and it may be the first chance in a long time to look at the 10-year from any other way than the long side. Let's see here. Reading the den, catching up here. Yeah, I mean, the big number on gold, I think that could possibly be hit, and then you're looking at, really trying to scoop it up is that 1295, 1296 area on gold. All right. The S&Ps, I'm looking at the tone of this marketplace, or the tide of the marketplace, and I love that the way Basil coined that term so well. Going into the S&Ps, and again, we talked about this may be the week that you just kind of like let things peter around for a while and then trade the reaction after that report. I mean, if you look at this thing, we've talked about not wanting to be short this thing and looking out for opportunities to buy it. Here's our daily profiles here, and now we're compressing up into this 2183.50 area. And the market could take it two different ways. Steve Banger and I were talking about this. And the market would say, oh, wow, quarter point, big deal. Oh, confirming full employment. Economy's doing great. Blah, 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 blah. I mean, the market could take that as a positive. I mean, you really want to wait for this report, in my opinion. And, if you want to roll the dice and do, trade, but, maybe a little risk on before the announcement, you're definitely playing with fire there probably, because you never know. I mean, that's the thing that happens after those, if you guys trade enough, is they run stops. It's, in my opinion, what I've seen in my, travels, it's better to trade the reaction after these type of scenarios, after these announcements. This is a big one. I mean, you can't really deny that this is going to be something to possibly just kind of turn things on a more macro long-term scale. And some of the things Steve said the other day, where a lot of these companies and trades and positions are like 20-to-1 leverage. If you're Bear Stearns, 50-to-1. But a lot of those have to really be kind of recalibrated, because a quarter point, when you talk about leveraging 20, 30 times on margin, you really have to start at bare minimum massaging the position to account for the extra incorporation of the extra leverage and the extra borrowing costs and things of that nature. So that was an interesting topic that he talked about. Okay, so the bean trade, we talked about this the other day. We kind of met the initial targets here, and we've stopped, but we haven't really wanted to get away from these targets on the short side. This was a nice little trade from the 1017s down into 963.64. But we're spinning around here, and we're going to talk about this a little bit farther when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to finish up with beans here really quick. The final thought on this is I think we're heading lower, but you can't go wrong taking some off the table, and that's really what this area is for. Right now, I'm out of this trade altogether, and our systems that let's see what we're doing on the systems here. Yep, I think we're flat on the systems, but spinning around down here, not wanting to get away from this inflection point, it's going to give it, as time goes on, if that continues to happen, it's going to give it more and more credence that the thing may continue to fall apart here. So that's the deal on beans. The dollar, same situation as yet. We're just going to, I think we're going to head higher. I think we're ultimately going to hit 97.16 on this move up. And again, kind of going into the dollar, looking at kind of the weekly situation like we talked about with silver. Just a really nice scene when these things are, I think a product that's probably going to head a lot higher comes down and gives you a little bit of a gift and gets down into these support areas on these long terms. So nice little feature there. Crude, just to hit the usual suspects here. The dollar rallying, you got to kind of factor that in a little bit, and my feelings are it's going to head higher. I think you still got this 48.06 stops above. It's kind of nice reversal that we did, but I'm a little bit more bearish on crude than bullish. I think we could fall apart a little bit more on this particular trade. You'll see 44.85 probably. Let's take a look at Apple. Trading 105.73. It looks like pre-market or in that general area. So still, let's see. So here's Apple. Talked about a new profile this week. That kind of was in force yesterday. There's that 105.47. So trading right above there. I mean, all things considered, what's over? What is it? How many $1 billion was it? Let me check that. $14.5 billion. I guess that's just slightly a rounding error to these folks at this stage, huh? It's hard to believe. That is a ton of money. But anyway, 105.47 is going to be your kind of defense area to play below there. I know we kind of moved below there this morning, but we're just kind of trading above that area. And again, the market is kind of compressing up into those highs. They could kind of just completely shrug this off. So, the collection area on the daily, 104.49 up into 106 and some change. Those weeklies at 105. So you got a lot of support, is what I'm trying to say, as far as weekly and daily time frames on Apple. This is one of the only, or well, not one of the only stocks, but Disney's been one that showed itself pretty well. It's just continued to get clocked here. And again, you're looking for, if you think the market's going to rally, you want to be in stocks. If you're trying to balance things out and be short some stocks and long some stocks, this is one that's kind of been on our radar screen lately, just staying below profiles, looking sick, as if something is wrong with it. It's not on sale. Something's wrong with it on Disney. Sorry, folks. Let me type in the right symbol here. All right, 3M. Alternatively speaking, this is the type of stock, we've just shown incredible strength on it. New breakouts, find support, new breakouts. Now we're just compressing, higher lows. This is our weekly view on 3M. The market goes south, all of a sudden this may not be the one that's going to hurt you too bad, and we could get a nice little new breakout on 3M. American Express. We talked about this one not really being, the darling of the XLF. What do you do with this one? You've had some headwinds, 66, 67, couple with the 66, 25. Financial stocks also, generally like a widening yield curve because they can, I shouldn't use the term rip people off more, but maybe I should use it. They love a widening yield curve, put it that way. And, for American Express to not really be sitting on a launching pad because of that concept alone is a little concerning from the long side, as opposed to, we look at a couple other stocks in the financial sector. Let's take a look at JP Morgan. This is one, again, just kind of anticipating, wow, we finally get to do our normal thing. And maybe it'll be just a progression of rate hikes. But, that's just going to be met, considering the temperament of the of the Yellen and her gang. That's going to be an uphill battle to get them to continue to make rate hikes no matter what, until it just gets completely out of control. Let's take a look at Procter & Gamble. Other stocks that are probably not to be shorted. I mean, the problem with this one is you've got a no-win situation on the short side, and I'll tell you why. This stock should have already been pulling back. And the problem with this one is if the market tanks, this one's probably going to rally. And if the market rallies, this one's probably going to rally. So even though it's kind of sitting on all-time high, and this is usually the anti-stock. So for this thing to be just sitting here way up in the ether, I'm still a buyer of this thing. We don't talk about this one a lot, but this is an ultra strong stock, and I don't really see how it could pull back at this state. All right, Johnson & Johnson. All right, So, what's the story here? Looks like pre-market, we don't have any prints yet. But I like this situation a lot. I like how we close below. We'll go back and retesting, and we've also got some, this is our weekly, and those numbers are 120.54. And I think it's Robert in Buffalo, if he's listening. I'm trying to get more numbers these days. We're going to be right back from break, guys, and here's Johnson & Johnson, new profile on the daily yesterday. We want to talk about this trade a little bit more.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we're looking at November beans again. Somebody in the den was asking if there's a possibility of these things hitting at 850. First of all, anything's a possibility with beans. But, you know, I feel like it's going to break. I don't know if I don't know if, the trade, if I can correctly, get my thoughts out in a logical manner here. 1017 was kind of no trade is easy, but it kind of was cool how we broke and came back and rallied up into it. I mean, you get opportunities sometimes where you can really kind of dial up the risk reward scenarios, and that was kind of one of them right there. And then, you know, that's a nice little move in a short amount of time. So we need to kind of spin around here, gather ourselves, and this looks like what it's doing, not just having an onslaught on the south side. But, you know, this type of action, this consolidation, I'd love to see it spin around a little more, and then just take a dive. First stop's going to be that 915 area. I think that John from Philadelphia and I were talking about like long time. I mean, this has been a nice long trade from a couple of different areas, but that confirmation on that breakout at 915, that could easily be in order here. 850 down here, I don't know. I mean, we'll have to wait and see. You always have to kind of look at these in phases and stages, the way I look at them with these levels. And again, you know, these inflection points they make it a little easier for me. And, you know, you look at some of the stuff, Basil or Rhodes or Pesavento, I'm calling everybody by their last name this morning. A lot of, and Tom and, God, I hope I didn't forget anybody. Some of the things they say, like, I love to listen to the shows, and when everybody's on the same side of the trade that's on TFNN, I get a little concerned. But, you know, get some different perspective, and, you know, look at some other I kind of make it brutally simple, I think, with the profiles. But there's a lot of things going on in the technical scene that I think can lend credence on top of what I say every morning. So, you know, maybe there's some things happening with some of the other folks on this particular trade on TFNN that can maybe give you a little more edge or a little more force, you know, insight on what's going on with this trade. I always look at it like it is what it is. These are where the buyers and sellers are saying the market should be, and try not to get too involved with, unless, you know, we're talking about report dates and things like that, not get too involved with the fundamentals. But I think there's something to be said for having some form or percentage of your decision-making process involve fundamentals. All right, let me go back to the den here. Yep, 915 and 850. GEOS. Let's take a look at that one. GEOS. This is a request from the den. Geospace Technologies. I don't know anything about this company, but let's take a look at it. I'm assuming this is oil drilling seismic technology. Thank you. Okay, great. I was thinking that it was involving something that Elon Musk had said, because it said geospace. But anyway, here we go. I like how this thing. I like how Navigator really changed gears down below. I mean, you guys don't have this in the scanner, but I love how this thing broke a pretty good long-term trend, and at the same time really got some confirmation on this Navigator. And we don't see a lot of things really going on here to not think that we have kind of, let me blow this up a little bit. You don't see a lot of things going on here that are telling you that, you know what, we should probably be shorting against this thing. I like how this is acted. I like how on the macro level we kind of switched gears here, and I like how we kind of explored this fair auction, this profile. This is our weekly. Let me blow this up a little bit. We had a new profile appear, what, 4 months ago, 3 months ago? No, 2 months ago. 2.5 months ago. We explored it. We found support. We're kind of compressing up here again. I like this from the long side. I think you should, you know, maybe wait for a weekly close above to really get full bore on it again. You probably should have some contracts long still left, or some shares long right now at this state. Here's a daily on GEOS. But I mean, a weekly close kind of puts another stake in the ground on GEOS. But I like it as long. Let's take a look at SWHC. Here's the weekly. I guess you're asking, yeah, no problem. What would be the point of this? Are you considering taking some off or getting long again, shorting this thing? Now, I think shorting this thing right now. Here's the daily. I'm showing it right now for Robert in Buffalo. I'm going to state some numbers here. Intermediate support. There's no weekly profiles up there, so it's kind of long and strong on the macro, but 28.36 is support on it, and we've kind of gotten back above 29.16. So you've got two areas you can play defense. I like this as a long. I definitely do not like it as a short. Technically speaking, I have no idea what's going on with. I guess the closer and closer Hillary might get a chance to get the presidency, maybe this thing will act in a kind of a correlated manner. Let's take a look at copper. I don't look at this all the time, but we're going to kind of peruse back to it. It's kind of been something that I've actually been a fan of being long from inflection points, and that was the 2.1677 here on the weekly. That obviously didn't work out, but now it's kind of a wait and see. There's really nothing to hang on to down here on the long term. So this is a good example. We try to pick battles. I talked about this a couple of weeks ago, I believe, as a possible long situation at 2.1677. So I didn't mean to pull a Kramer and not revisit this and talk about a trade that didn't exactly go how I planned. But thanks for bringing it up. And again, this is an incredible reason why you have stops in force. So I think it's a wait and see. You don't have anything to play defense on the daily either. P. So we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay. Yes. Test. Okay. All right. I think we're back now. Okay, here we go. Just communicating with TFNN. All right, here we go. The oil trade, again, my general feelings on that is we're going to just continue to head south. 44.85 is going to be the number on that one. I want to hit a couple of currencies here. And we hit a couple of stocks that some folks threw out there earlier. Please feel free to throw them out anytime. The Euro trade, this has been one, if you've been watching this show, I just don't want to be long the Euro. Here's the weekly right in the middle of the fair auction. You know, the dailies, we kind of broke again here. This is the Euro daily. You got a little bit of a bounce there. Isn't that wild? Look at that. That inflection point. These are great areas to pick battles, guys. That 113, 42, 43 up top, and now we're sinking. So, you know, you got to have the general idea that, you know, our rates get raised, the dollar goes up. I don't think that's all baked in the cake yet, but the euro could get, you know, hit pretty well. So that's the general feelings on the euro. The British pound trade, I really like how this thing's hanging in there and staying above those weekly unfair lows. Still don't mind looking at this from the long side, but the more it spins around down here on a weekly, the more that might be a continuation pattern. And again, you know, the dollar, these rates kind of come to fruition on the getting raised. Could sink it a little bit, but I like how it's acting. The yen trade, obviously a little, we talked about this one yesterday, talked about, you know, this 103.52 area being the initial targets on the yen trade, and I don't see any reason why that can't happen. And we also talked yesterday about intermediate support on that trade to kind of play defense against to drive this thing higher was 101.45. So, again, you know, closed above 2 days ago, spun around. You're always looking for risk-reward scenarios where you can play defense relatively tight and then, you know, have your rewards a little bit higher than normal. And, again, the yen target right now is 103.52. And just like we caught a really good move off that 101 area and ended up hitting those weekly unfair highs before around 108, 107 and some change, same scenario. 103.52, and I don't really want to think about going short there. That's just the initial targets on the yen trade. Aussie dollar. I like this one from the long side. You guys know this. 74, 78, still support on this particular trade. On the long-term trade on the Aussie dollar, again, this is another example. You meet some targets, just like we did around that 77, 46, 47 area. You got to kind of be willing to take some weight off. And that's the drill on the Aussie dollar. We're going to take a look at Tesla really quick. And this was that cool setup that happened, 233.37. This company is pretty stretched out financially. But this guy comes up with a new idea. And my feelings on this one are actually considerably lower. But it was nice how this thing, I'm looking at the weekly again, and giving you a chance to get short. We talked about 233 back in this area, actually. But, again, that's kind of a good example of letting the market come to you. What do you do with Tesla now? We're down yesterday pretty hard, 215. What are you looking for here? We're kind of in a situation, I guess, that, monetary stops really need to be put in force here, because I don't really see any reasons to step in right now and get short. But if you're short, which I hope you were from before, there's just no way to play defense here. So this is kind of a monetary stop situation at this stage. All right, since you guys are talking about natural gas, can I look at natural gas? Is that going to hurt anybody's feelings? Let me get the right contract up here. I don't trade natural gas. I've said that a lot of times. This thing just completely scared the pants off me at one point when I tried to trade it. Again, close above on the profile, kind of rattle around, use it as support. 2.889 is support on this. Does this go higher? I don't think you can't even look at this. I don't think you can look at this from the short side at all. So that's the deal. I think you got support there, but again, it's not something remotely shortable right now, I don't think. So kind of blocking out the short side, it looks like it's got the possibility of heading higher. Let's look at December corn really quick. $3.20 a bushel. Did anybody think anybody would be saying that? $3.20 a bushel. The corn crop is just daggone enormous. And we got through any weather scares, whatever. You've got some rotation going on right now in supply, but 330 unfair lows on the weekly, 330. Man, I don't see, you can't go long this thing. There's like zero reasons to go long, in fact. But where's the ultimate targets on this type of corn crop? We can go sub 3. That can happen. Let's take a look at Facebook. All right, so the stock you're never supposed to short. We're getting up into these 120. This is the inflection points up top, 126.32. They don't even give you a chance to buy support on this thing. What do you do with it now? You don't short it. You're buying breakouts again, unfortunately, here on Facebook. There will be a time to short this, maybe when an entire new technology happens that everybody gravitates toward in the social media scene, but it ain't there right now. Amazon, similar situation. Do not short this stock. There's a chart of it. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. We're talking about Amazon. Same story there. Just do yourself a favor. Do not short that or Facebook. Even though we're at the top of the profiles on the weekly, these things can you can find better things to short. Put it that way. Let's take a look at the XLE really quick. Really interesting situation. Just again, this is the XLE. I've got it on a weekly kind of view here with the weekly profile. 6903, kind of astonishing that we're just kind of spinning around here above weekly profiles. Could look at that as an indicator in itself for crude to go higher. Kind of has bucked the trend on crude a little bit, kind of wild. But again, my stance on crude is just, we're probably going to see 44.85 before we move higher is what I'm thinking. The XLF, getting happy here. Rates. Here's the weekly. Blue skies ahead. She's going to do what she said she might do, finally. If you guys ever get a chance to come to the Philippines, I got this, I don't know if you call it a dessert or just an everyday staple. It's called piaya. It's where they grow 70% of the nation's sugar on this particular island. This island is as big as North Carolina. Probably shouldn't call it an island. Can't call it a continent though. and they had sugar's everywhere. It's on every truck going down the road. It's in every field. And they have these things here called piaya where they take a kind of 2 pieces of flatbread and put this kind of sugar, kind of raw sugar, syrupy stuff in between and kind of pan fry it. My God, is it good. I ate a lot of them today. That's why we're talking about it. All right. Let's take a look at Ford. All right, so I had an email about this one. I forgot to mention it earlier. I apologize. All I can say about this one is you got better longs out there, and if you're going to look at shorting some stocks, you can play defense above 1268. I don't really see this as something to look at as on sale at all right now. That being said, let's take a look at General Motors. A little different situation. Looks like it's kind of on the launching pad. So you got a little bit of, I don't like that pairs trade concept. So I'd rather be long GM and short Ford right now. We'll take a look at Wells Fargo. Yeah, quite happy. Quite a happy crew right now. Yeah, widening yield curve. And man, I don't know. Does anybody have an account at Wells Fargo? Have you been into a branch lately? They figured it out. They want to make it so painful to go in their branches to force you not to ever go in again. It's incredible. The people. I was talking to one of the managers there the other day when I was back home. She couldn't handle it anymore. She said the people that we're hiring. She goes, I don't mind dealing with the customers, but the people that we're hiring that I have to manage, that's the big problem. They'll hire anybody. Anyway, guys, you've been great. Stay tuned for Larry. We're going to end the show now, and stay tuned for all the hosts on TFNN all day. Catch you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.